All right, welcome back to Yahoo Finance Live on this Tuesday morning. Jared Blikre safely back from the floor of the New York Stock Exchange, joining us now for a look inside the market's internals here. And Jared, I want to talk a little bit about Dow Theory and what that is telling us about the setup here for markets. We talked at length this morning about the setup in crypto markets. Equity markets, though, maybe looking quite a bit more constructive.
They are. And let's dial this back and get real basic here because I'm excited to talk about this. It all gets down to market sentiment. And what we're looking at now is a Dow Industrials versus a Dow Transport. These are the most ancient indices. And when you use them together, and you can use them together to kind of confirm the price movement. And so if you see a record high in one index, you want to see a record high or a significant high in the other to confirm it. And when you see a trend change in one, you also want to see a trend change in the other to confirm it. And when one gets a trend change, you're probably going to get a trend change in the other. So this was a very primitive tool, but a powerful tool back in the day. Today, now we have other measures of market internals. We have number of stocks that are above the 52-week average or hitting new 52-week highs, above their 50-day average, above their 200-day average and such. So let me break down this chart, because it gets down to trend. First, this is a year to date, so we have the definition of a trend is higher highs and higher lows. So let's take the transports. We have a low here, we have a high here, higher low, higher high, higher low. This goes on and this goes on until, guess what? We have this low here, but then we break it. And now we have a lower high and a lower low. So we have a trend change. And guess what? The same thing is happening in the Dow Industrials. We have these series of higher highs and higher lows throughout into May, and then the trend changes. So this is just a very old and simple way of measuring market sentiment. And if these two indexes are both trending lower, well, that's what the trend is. Now, I want to go back and I'm going to show us the S&P 500. Actually, let's stick with the Dow here. I'll do a 3-month chart of the Dow. And you can see we're climbing up here. Here's another method of technical analysis. We take this high here, we take this low here, and we measure the 50% retracement, also called the halfway back. And this comes to about 34,200. And there are some other technical levels that are other technical reasons why this is an important level. We haven't hit the all clear. In fact, we're not even that close to it. We really need to rise up and see if there's participation. Participation means, does the level get some price reaction? If it goes down, then we have price participation from that level. If price just blows through the level, then you don't have participation and it's not that meaningful. So price always tells us what the market participants are doing. You just have to learn to read it and take some time and practice, but it's very, very useful and it saves a lot of headache and money, guys.
Jared, we were talking about this briefly via email yesterday, and you flagged other internals of the market that are also starting to break down. What are some of the most worrisome on your radar?
Well, I like to look at the trend in new 52-week highs, and not only all the stocks that are listed on the New York Stock Exchange, but also the S&P 500. I don't have the charts here at my disposal to show you, but it's another form of market sentiment. So if you have the market going higher, but the number of stocks that are hitting 1-month lows is increasing, that means that the market is fueling a rally based on a few concentrated stocks. And that's what we have when we have these big growth, these mega cap names fueling the higher highs in the indices. It's not that sustainable. You want to see participation. You want to see other sectors rallying to new highs as well. So if you see all of that, then you have confirmation. But when you have divergences, and that's what we're looking for, divergences are an indication of when there's a little bit of disagreement in the market. It's not showing up in the majors, but it's under the hood. So using all this information together, you can get an idea of when things are starting to break down. There are always a lot of clues. And if you just pay attention and keep an open mind and release yourself from your opinions, then you can see these things and hopefully not lose your shirt and live to trade another day.
All right, Jared Blikre with a look at the setup right now inside the market, past some of those headline indice price levels we talk about so often here on Yahoo Finance.